Let's get more on this now with Ibrahim Suffian in Kuala Lumpur. He's the director of the Merdeka Center for Research. Welcome back to the program. Now, Indonesia didn't even wait for its scheduled monthly meeting to raise rates again. Why is the central bank in such a massive rush?
I think this urgency reflects the great concern that the central bank in Indonesia feels about the rapid depreciation of the Indonesian rupiah and the rising capital outflows. And Bank Indonesia is attempting to restore investor confidence before negative market sentiment becomes more entrenched. And I think this emergency tightening signals that policymakers are prioritizing stability over short-term growth concerns, and also because they have a large population that are struggling amidst the current economic situation, and a weaker rupiah raises the risk of importing inflation, particularly for energy, food, and other industrial inputs. So I think they're seeking to preserve Indonesia's interest rate differential with the United States dollar assets amidst these very elevated global rates. And I think they also remember the lessons of the 2013 taper tantrum, which at that time, when the US tightened rates, investors sold out from Indonesian stock markets and also currency, creating a crisis in Indonesia and other emerging markets. And so markets also respond to policy credibility as well as rate increases. And I think this unscheduled action suggests that policymakers view the current pressures as potentially systemic rather than temporary. So it's a defensive measure aimed at stabilizing financial markets and protecting their macroeconomic stability.
Now, a lot of this trouble is being blamed on global chaos. How much control does Indonesia actually have over its own financial destiny right now?
Indonesia cannot control what happens outside its borders. They cannot control global interest rates, geopolitical tensions, or the investor risk sentiment. But what they can control is the tools to influence the outcomes as it affects them. They can adjust rates, they can intervene in the currency markets, and also manage the liquidity conditions. And I think the Indonesian government can strengthen their fiscal credibility and reassure investors about budget discipline. And they can actually enact some structural reforms to improve productivity, reduce vulnerability to external shocks. And I think they do have another thing to their advantage. They have a very large domestic market that can buffer, that provides a buffer to that is unavailable to smaller countries, smaller economies like those around the region. And a healthy foreign exchange reserve does give them some flexibility towards defending their rupiah. So their destiny is partly determined by external conditions, but domestic policy credibility remains a crucial differentiator.
Indonesia has been a major emerging market success story in the last decade. Are we looking at a temporary bump in the road, or is the country's economic foundation starting to see real structural cracks?
Well, I think what we are seeing right now, suggests more of a cyclical stress episode rather than a full-blown structural crisis. So I think it's a bump, but it is something that recurs from time to time. Indonesia is unique in the sense that they have a very large domestic market, and therefore they can continue to cushion themselves because they have a growing demographics and also a growing middle class. Regardless of all these issues that people are talking about, the public debt levels in Indonesia remains generally manageable compared to many other emerging economies, and the banking sector fundamentals are generally stronger as compared to previous crises. But they do have some issues that deserve attention. Their economic growth is very dependent on commodities and domestic consumption. The productivity growth and industrial upgrades is quite uneven across the different sectors of their economy. And foreign investors into the Indonesian market, they are looking to see clearer signals about domestic governance, policy consistency. And I think some of the issues that people are talking about relates to the big ticket items, the big ticket projects that the Indonesian government has embarked on, such as the new capital city, large-scale infrastructure projects that are all taking place more or less simultaneously. And so that raises question whether or not they can manage all of these fiscal obligations at the time when domestic and global markets are uncertain.
Ibrahim Suffian from the Merdeka Center for Research, thank you very much as always.